What's going on, everybody? Fisher Trader again, James Nash. Here we go. So I'm talking about a couple of things, all right? So everybody has their own preferences, and a lot of these things will actually fall into that category of preferences. One is, what is your favorite brokerage? So I have a handful of brokerages. I've opened up pretty much every account that you can have. What is the best brokerage? What brokerage is the best? What's your favorite? Well, that's a tough question. So I have to say, all in all, Fidelity is probably my favorite brokerage, just because of all the access that you have to the market as a whole. Pre-market hours, after-market hours, basically 7 a.m. to 8 p.m. Except for options. Options are only 9:30 to 4. SPY options, I believe you can trade like 15 minutes after the market closes, so 4:15 we'll give that. But Robinhood is what you see here, and the positions I was talking about a while ago. You see I have all of them here. I'm on the laptop, so I don't have my mouse out here, so it's hard to scroll this little box here. This only shows the options. XLF debit spread I was talking about. It's actually currently in the money. 21.50 is the low put. I wanted to close in the money to receive the full $50 of the trade. I paid 35, 32, 35 for it. I can't remember. Well, let's just look. Real quick, this just to show that selling the cover calls, receiving the premium, and debit spreads are very consistent when you start to know what you're doing. Now, debit spreads are still directional trades, so you have to be careful, to make sure you're still right, but at least give yourself enough expiration time to be right, okay? So we started here in January. It was like $400. I was throwing 20, 50 bucks in here and there. Well, we started around $700. That's on January 24th. And we scroll across, you can see some losses, some gains, okay? In the 200 range, and it's like, it's getting ugly over here. And that's when the debit spreads start to come into play. And then I hit real big on a couple of debit spreads with Tesla and just blew it up. And then that's when we got up here. And then I started selling calls, and we're just basically all across the board here. I was asleep during this peak here. That was about $6 grand. That would have been a nice obligation to close. My limit order didn't quite hit, but it got close to it. So now currently we're sitting over here at $4,068. So for 3 months, so this is the consistency factor. This is 480%, 479.6%, 480%, $3,366, okay? That is in between January and now, okay? So that just shows that the debit spreads and the selling the cover calls properly and taking the time to pick the right stocks, get the right credits, the highest credits, okay? Those things can come into play. Debit spreads, I did the video on them. They're excellent. Go watch those videos I did on the debit spreads and look at the strategy I use to create the best debit spread, okay? And in the future, I'll do a recap video just to kind of fine tune it for people that don't really get it. So this debit spread here. So here we go. So it closed currently showing the $30, so $2 down. I paid $32 for it. So we're looking at XLF to close. I bought the 22 put, sold the 21.50 put, so we need it to close below 21.50. Currently, as a market close, what the hell's my share price now? There we go, 21.36. So currently, as long as it continues to trend down, which it looks like it's doing beautifully, the high of the day there was 21.83. So what's going to happen is this is either going to accept my limit buy to get out of this position if it opens up 21.30 like it is, or so you see how you bought the one put and sold the other put. So it took the 59 and subtracted the other 29. So currently the value, you can clearly see that it's $30, okay? So my return, I paid 32 for it just to get in the trade, because I pretty much saw it as a very, very high probability trade taking place, even though the return is capped at 50 bucks, 21.50 and 22, $50 difference there, and options money. So what we need to look at is my queued sell is $48. So 50 is the absolute cap, but I will easily, willingly sell at $48 to take that $16 profit there and go from there, because why would I really care about $2 more if it risks me losing the trade as a whole? Because if it expires above 21.50, it's okay, but if it expires above 22, I'm going to lose money. The whole position will expire worthless, just like a naked call or a naked put. So go back to this. We'll go back to the portfolio and show the position here for the MFA. This is something I wanted to talk about. Come on. Are you loading? What's happening? My Wi-Fi going down? I don't have it on Ethernet, so you gotta bear with me. Let's try to load. Check my time. 6 minutes, looking good, looking good. Here we go. All right, so MFA $1 call. These shares are currently trading at roughly 162. Okay. This is a $98 premium. That's a credit you receive for selling the call. I sold this call for $130. Okay, average credit per share $130. Break-even price is $2.30. So if this went to $2.30, that is where I would break even. Okay, I theoretically want this stock to stay below $1. Okay, but it's not below $1. So what does that mean? That's why I want the longest expiration I could get, because the farther this goes, see, my credit was $130. It's currently at 100, I believe. So yeah, 98, same thing. So basically here, we can see that I could sell this right now. I would probably be able to sell it, I would probably be able to buy it back for easily $100. I would shoot for 95 best. We can look at some of these lows. Yeah, $90. So 90, 95 is where I would shoot for to take that 35 or 40 bucks right off the table. Okay. Now, in the event that MFA is above $1 come October 16th and this contract exercises, for some reason I couldn't buy the contract back, then I would be stuck selling that one lot of 100 shares, because I only did it to one. I would be stuck selling that one lot for $1. So I would technically lose the 60 cents roughly per share average cost that I have on those shares. So let's see if I can get a blown up version of the whole thing. All right, here we go. Yeah, average cost 178. So I would want these shares to exercise, right? In the event it was the sold $2 call, but it's not. I paid $1.78 for these shares. I do not want to sell this at $1 because I'm going to lose 78 cents per share times 100, because I only did one against that, and I'm going to lose money on that, so it wasn't worth it in the first place. So 78 cents, if you do that times 100, that's $78. So if I received a $130 credit, but I lost, still sold the shares, that wouldn't be too bad. It'd be okay. But anyway, what you're looking at is the equity is $810. So you see the 5 contracts, okay? They show the value different. The total return on the contract is $75. That's showing that I'm still in a good place on my shares versus the exercise price. So once it goes to 2 and some change, hopefully it gets exercised and they sell all 500 of these shares at $2. Okay, that would be ideal. And this is going to, now we're going to flip back over. We're going to go to the brokerage question. Which brokerage is the best? Well, let's expand. Let's look at these charts. These compared to what I showed on my other video, which I'll show in just a minute for Fidelity's Active Trader Pro. This is fine for somebody who's basics at trading and charts and stuff, but these are no good, because each of these candles is 10. Let's see what chart are we on here. Let's go to a day chart. Let's see what's happening right now. Yeah, here we go. So each of these candles on Robinhood are 10-minute candles, okay? That is, by the time you get your signal to buy or sell, if you're trying to intraday trade or day trade, you're just getting destroyed by the market because you're going to be so far behind on your entry, you're going to miss a lot of profit, or you're going to end up incurring a whole lot of loss, all right? But this is kind of the basics. You can throw some EMAs on there, some support resistance, but you really don't have a lot of options. You can change this over to lines, which is really difficult to read when you have EMAs. You got your MACD and your RSI down here, which are great indicators if you can read what's going on. You gotta add data, you can add moving average, strength index, that's all you got, man. So let's close this. Boom, Fidelity. All right, let's look, see, we got so showing hopefully my account number is not being exposed right now. Doesn't look that way, so that's good. So we have a 50-50 split. 51% of your selected accounts are invested in stocks, which resembles a balanced portfolio. So I read in that book that I was reading that a balanced portfolio, you take your age and you subtract it from 100. 100% obviously is your cap. 100% minus your age. I'm 31, so we'll just say 30, so 70%. I should have 69% in stocks in my portfolio. And as I get older, it needs to come down, okay? So why is that? That is because we want to make sure that we are balanced, okay? But this is Fidelity's platform online. This is not the trading platform that I'm about to show you. I'm gonna close this. This is Active Trader Pro from Fidelity. Got a lot of similarities with some other major brokerage platforms. But you can put your own lines, you can draw whatever you want. You can do, shapes and all this other crap. You can put other stuff, you can put stops in there. You can basically add anything you want to an extent. You can put dividends, splits, earnings, things like that. Let's just see. Let's see when the next earnings is for A and B. So here you go, you get your triangle. So there's your earnings, and we should have one, I think, in the next week or so. Let me check the time real quick. Sorry guys, I know that's annoying, 12 minutes. Anyway, so this is Fidelity Active Trader Pro. Got a lot of things going on here. I love this brokerage as far as a whole, really. So no complaints here. Close this out. Webull, here is Webull's brokerage, okay? This is kind of a base look at it. You can see global, you can see this Earth show. Look at all these red markets, man, this is beautiful. Look at all this, look at what's going on over here. Everything is just getting destroyed. I mean, it's not terrible, it's not like 20% or nothing, but the Dow's still at 2315, still $6,500 off the high. So you really got to pay attention to these things because this is the whole broad market, man. This is the world. And we go to North America. All right, so you just see what we got going on. All of our markets are red. It's 4 a.m. Here on the East Coast in Georgia. So you see, the market's red. The Dow is actually doing okay. If this is accurate, I don't know how lagging this is. Let's go to stocks. Let's see. I'm looking for this to cross up. I'm looking for LTRPA to go back up a little bit. I've got a handful of shares. I would really, really love this to happen again. That was in December. I would make like $35,000 on that trade. You got Tesla over here looking beautiful and ugly at the same time. Let's go ahead and zoom that out so you can see what I'm looking at here. Yeah, and again, this is Webull's online brokerage. I love the mobile app. I love the mobile charting. It's so in depth for what I do constantly. So here's Tesla. Here's what you see. You see your EMAs. You got your 8. I have different settings on these EMAs: 8, 24, 94, and 197. So we're pushing up. We're looking to go higher. But you can see the quality in these candles versus Fidelity Active Trader Pro. no substitute whatsoever. Active Trader Pro blows us out of the water. Thinkorswim blows us out of the water. But for a starter, again, with a free brokerage, no fees, none of that kind of stuff. They still have margin and all this extra stuff. Webull is really good. Their user-friendly factor is just, it can't compete with Robinhood's simplicity, okay? Robinhood is very, very simple to use as a whole. But yeah, here's your basis. You can compare it to different ones. Let's compare it to, to this iCompany. Let's see. Well, this iCompany's not doing nothing. So the iCompany is way down here, and Tesla's clearly making this beautiful wave. But you can see a slight pattern once it comes down on the bottom side. They kind of get that same burst going right here. But this comes in handy if you can match the screen and mirror screens like that for different ones with like SPY. That would be great. Now we're gonna close this. Get out of Webull. Me and my boy. Quick view. Oh, that's book number 3 on selling calls. Okay, and let's see what else. Discord. Man, nothing is loading right now. What happened? Anyway, we'll let that load. Discord. This is where you get the chat. There we go. Oh God, I don't remember all this. Anyway, that's Discord if you didn't know. My Wi-Fi is really lagging out here. I need to get one of those extenders. Alright, let's see. Anyway. So, hopefully that answers some of your questions, guys. Don't automatically. Let's see. Let's see, stocks, options. There we go. Trying to go ahead and get a heat map on here. Oh, come on. Trying to see if it'll show it to me without having to do all this other stuff. No, looks like it's not going to let me. All right, well, let's just go to Tesla since we were talking about Tesla and see what's going on in her world. Good old Elon Musk. The thing I like about Fidelity is you can see clearly all the news and analyst opinions and all this crap that they have here. So Tesla raises China-made Model 3 prices after EV subsidies cut. Tesla names Hiromichi Masuno its 10th board member. They get your 8K. Bezos and Musk among billionaires gaining net worth in the pandemic. So that means these guys are making money. I personally feel like Tesla's going to dive, but then when earnings takes place, I think it's going to surprise a lot of people. And I personally think Tesla's going to rise. Again, this is not trading advice. Hopefully you guys can see what's going on over here. I think my battery's dying on my phone. So yeah, let's go ahead and excuse me. Excuse me. All right, here we go. Doji candles. We'll get to that in just a second. So favorite brokerages: Fidelity, Webull, Robinhood, done. I don't like TD Ameritrade. They screwed me on a margin call one time. That's all it took. Tastyworks is garbage to me. I don't like it at all. The platform sucks. Interactive brokers, extremely complicated. Interactive traders, which is the class that I paid way too much money for back in 2017 of August. Hated their platform. It lagged. No real-time data. It was crap, actually. A lot of information built into it, but just useless. Fidelity has all that stuff for free, and the charts are real-time on Fidelity Active Trader Pro. So, majority of brokerages are all fee-free, so you don't have to worry about that anymore. And what you do need to do is look at these candles here, and we're going to look at Doji candles. What is a Doji candle? A Doji candle basically are these symbols here. And of course you have the miniature one, which is the spinning top. Matter of fact, blue so you can actually see it. All right, so you get the little small one, spinning top. That means the price opened and closed at the same place, okay? You got your high, you got your low, but your open close is balanced. Indecision is the famous word used for this. The normal doji candle, pretty much the same thing, okay? My favorite two candles that you see on dojis, if you actually watch doji candles, are the headstone or gravestone doji candle, and this is basically signaling a bearish move if the next candle confirms. Likewise, bullish move is the dragonfly, which is a beautiful doji candle where basically this is your high, this is your low. It got pushed way down. Buyers are like, nah, bruh, and we go on back up. Same thing here. Sellers pushed it down really hard after the buyers attempted to push it up from here. Okay, so buyers tried to push it up, and sellers were like, nope, come on back down. Bearish motion, bullish motion. So bull, bear. All right. So what does that mean? That means that these candles are candles that you need to watch out for, especially if you're intraday trading, so you can kind of see what's going on, especially if it's happening near a support line, resistance line, or an exponential moving average, weighted moving average, whatever. So those things are very important. So charting is of absolute importance with technical analysis. You do need to watch out for news. I don't really like depending on news to give me trades. Personally, I just like trading what I see. I love my money makers are debit spreads, long calls or puts, and by that I mean really long calls and puts, like 4, 5, 6, 7, 8 months from now. Okay, and of course my really new recent favorite of this year is selling covered calls. Okay, that is my money makers 1, 2, and 3. That is what I have used to be extremely consistent this year so far. Last year I used all the strategies I traded. All the strategies I traded with my own money. I don't paper trade. I've said that before. I've used all those same strategies multiple times in small, large, different balance accounts or whatever. I've tried them on baby accounts to build them up. So I got one account that's like 150, 160 bucks right now. I'll use the debit spreads and sold calls to build it up. And I will also simultaneously do my dividend account I had that got just brutalized by the whole coronavirus thing. And I'll sell cover calls against some of the shares I have in order to produce income on those shares. So I really hope everybody paid attention to these videos. Sorry it was a little longer. Sorry if I run around checking my time because I have the camera flipped around this time, so I can't see the time. So brokerages, candles, my 3 favorite types of trades. We went over indicators in the other video. Please check them all out. Like and subscribe to the channel, share the channel. I appreciate the support. Thank you. That's going to be all for this one.